Good morning, everyone. Welcome to this morning's show. And today we're going to look at landlord cost saving and how to really slash that buy-to-let expense and how you can cut back, but without kind of jeopardizing maybe the quality of what kind of buy-to-let you're putting out, and how you could obtain buy-to-let properties and investments without kind of really overspending and kind of breaking the bank. A lot of people get carried away sometimes. Do you know, whether it's looking at the lending options or whether it's doing the refit and things, sometimes it could be costs could get away from people if you don't keep an eye on them. I mean, I'm sure you've seen that happen over the years, Jim, with people
30 years experience
overspending. Yeah,
I've seen it all before. And the most important one I'm going to talk about is how you value your time. The most important one, again, I'm going to talk about, so you can hear this for anybody listening in, it's how you value your time. You would be gobsmacked if you realised how much time you're wasting on other things that are only that important in the scope of things. You're too close to the trees that you can't see the forest. That's the problem with a lot of landlords. That's their biggest issue. They can't see the forest for the trees. And this is what we'll discuss towards the end. But in the meantime, mortgage deal reviews, insurance audits, especially, I've just gone through it right now, minimising the maintenance costs, like you said. I think boosting income, and the one thing that I've obviously got to work on, and I do work on quite a lot, is cutting my tax bill. Tax efficiency. It's the most important thing. It's the most important thing I concentrate on now is tax efficiency. So if you're a landlord that wants to be extremely wealthy, you don't get them often anymore. I mean, being a landlord isn't for the faint-hearted anymore. But if you want to be extremely wealthy at being a landlord, this is the show you need to listen to. Definitely.
Yeah. I mean, now more than any time, I suppose it's a really good time to look at that and review what your kind of borrowing situation is and can you get a better deal. I mean, mortgage rates, base rates obviously slowly come down gradually since the end of 2023. So 4%. Now is yeah.
4% base rates. You can get good buy-to-let deals right now with the Mortgage Works, for example, at a really good rate. And talk amongst yourselves. I'm going to just look up that now, just to see if I can see what you can get just now, and I'll show you what deals you can get. So if you want to cover some of the things that are in here,
I'll just check
some of the rates right now.
I mean, whether somebody's looking at their buy-to-let portfolio and thinking, right, maybe it's time to start switching lenders, possibly remortgage, do you know, all these things that could help you cut back on what your spending is at the moment. There's steps that you can take to help get the best deals and avoid limiting your options and things. Speaking to a broker who has access to the market and complete, as opposed to being kind of, a lot of people sometimes just use the bank, and sometimes it's not always the bank that gives you the best deal. You're better having a broker. I mean, that's a really good thing to expand that. But the whole market as
definitely. This is the deals right here. Let's drill it down. This is a purchase. This is a purchase only, or a remortgage, or a further advance for a limited company. This is a limited company. Initial rate 3.99, 2-year fixed rate deal, 75% loan to value. 3% of the loan is obviously the amount, and then it falls into 8.49 variable. I mean, that's just ludicrous. But you know, the reality is you'll just be able to do another deal at the end of that. Usually you get something sent to you. 4.99, good. 2-year tracker, 3% the loan. So there's 4.67, 5-year fixed rate deal. 4.67, 5-year fixed rate deal, 3% loan, 75% loan to value. Again, purchase, remortgage, further advance, 2-year fixed rate deal. You get a £4 product fee, so you can work out which one's best for you. But they're really good rates right now. And remember, this is interest only, which is what you really want, because if you're not doing, for me personally, I know it's what you want, because you want to ensure cash flow is going all the time. That's the most important thing. Cash is king. No, turnover is vanity, profit is sanity, but cash flow is the king. And there's no profit until the money's in the bank. In other words, when you've got that rent in your hand, that's the most important thing at this point in time, to keep everything going. And that's what mortgage deal reviews are all about. Let me just, I'll quickly, I'm just going to, I mean, you know, again, talk amongst yourselves. Just let me go back to that criteria. I want to change something here. Remortgage. Let's see if that changes. No, it doesn't. Further advance doesn't change either. These rates are pretty good. Now, you've got other lenders as well. Birmingham Midshires was another one. Bigger portfolio landlords. You've got Shawbrook. You've also got oh geez, I can't remember off the top of my head. I'll see if I can bring it back to me. You got Shawbrook as well. Anybody else can chip in with the lenders that are available. The other one as well that I could think about, I've got Aldermore. Aldermore's another one. Aldermore's usually a bit pricey. Shawbrook's a bit difficult. Usually for smaller portfolio landlords, you know, up to about 6 or 8. You've got Birmingham Midshires and you've got the Mortgage Works. Very good. Whole of market and independent financial advisors. Kester Salimi is really good at this. We could refer you to him. Fixed rate deals are usually cheaper than now. They want you to lock into things. They want certainty at this point in time. Plus the fact if you do a fixed rate deal, what it does as well is it takes out any further mortgages you get because it's a fixed rate. It won't fluctuate. So a lot of lenders actually discount that when it comes to assessing your financial ability for the next one because it's fixed rate and fixed in. These are the most important things. Watch out for early repayment penalties, but you know, if you've kind of got certain, the good thing about mortgage deals is you've got certainty if it's fixed. You know what the rent's coming in. Typically, rents go higher. You know what the amount of the mortgage is. If you've got a letting agent, you know what the letting agent fees is as well. If you've got a good margin for tolerance as well, that's the most important criteria. We might talk about that later on. And we're going to talk about margin and all the rest of it later on. Boosting your income and stuff like that. We'll talk about that later on. So I think for me personally, mortgage rates, good deal reviews. I'm fixed rate for everything right now because I like certainty. But I've worked in deals where I can have break clauses on my lending. I mean, my lending's millions. I can work on break clauses where the rate goes down so far, base rates, I can actually break out of that for a minimum amount in comparison and actually get a new deal at the lower rate. So I think that's the most important thing. So if you need a bit of advice on that or any support on that, reach out to us because we'll be able to go over with it, over that with you. And you never know. You could be, and hopefully you probably will be as successful as I am. This.
I mean, you're absolutely right, and the fixed rate deal thing, you know, it's a safe bet. It's usually a lot cheaper and things as well. But if you're in it, say, for the fixed year for a 5-year period, for example, something better might come along. So if you've got that ability to come out of that without having a really high exit fee, then you could then switch to a better product.
For people that are on a fixed rate right now at a higher rate, it's easy to work out the sums. Again, we're not going to go over it in here, but it's easy to work out the sums if you want us to do that and help you with that and give you a portfolio review. If you want us to do that, we're more than happy to do that for you. And we could work out how your portfolio is structured and how it should, what we should do from there. I think that's the most important point as well.
I suppose another thing to look out for if you're thinking about switching products and things, look at that, look at like the application fee. Because if that's quite high, then it might just outweigh the benefits of actually switching at all.
Well, the classic example is the application fee. Sometimes they make it quite high and they reduce the rate for the application fee being high. But if you get a 5-year fixed rate deal and the rate's reduced, then you work out how much it's saving you over the 5 years for the rate being reduced to the 2-year rate in comparison to the 2-year rate or in comparison to a variable. And if the rate's reduced at that point in time, then you work out how much you save over 5 years in comparison to the fees that you're paying at the beginning that you're having to pay out as a result of it. Some people just want as minimal out as possible, and that's sometimes a good deal. Again, we'll talk about these numbers when we get to that. But definitely, I think mortgage deal reviews, reach out to us. We'll do that. Listen, just click on the link. That's important as well. Click on that link. You can read some of this stuff anyway, because these shows are actually, they're scripted. They've got a script, but you know me. I go wandering. I bring a lot more to the table because of the 30 years experience I've got in that and being a big portfolio landlord as well.
I was going to say also, like, some people might look at different mortgage rates and things and think, oh, that's a really small difference. That's not going to benefit me really. But even that smallest amount over time can actually benefit you. You need to make sure you work that out correctly.
Definitely. This brings me on nicely to what you had said here, insurance audits.
Yeah.
Best lender on the market. I said the other day, you know, this is something happened, storm damage. Not with this insurer, with this for the buy-to-let. I mean, they've been great for the buy-to-let. You know that yourself.
Yeah.
But with a commercial policy I've got with them, and I says, I tell you what I'll do. I'll just change my insurance from all my properties, or several, which is a lot of properties. I'll change my insurance to someone else and all the rest of it, because they wouldn't uphold it about storm. I says, the wall was there, the storm blew it down, end of story, storm damage.
Yeah.
So they've listened to me, and I said, I tell you what I'll do as well, I'll stop endorsing you. And they're like, oh, well, we'll send it to insurer and see what they say, because they might actually just take a view on this and think, okay, we'll just pay out on it, because we're going to lose this guy.
I was going to say, I've not heard the outcome, but
It's a lot of money. It's only the other day they said that. I didn't expect them to come back and say that, but what I did was I was really upset about it, because I was like, this is storm damage. Regardless if your loss adjuster tries to wangle their way around it and say, oh, but there was a bit of vegetation in there and that's what caused it as well. It's like, flipping out, this is a big solid stone wall about 3 or 4 foot thick. You know, it's at the Cooper office. And it was the storm damage. It blew it down, basically. I mean, what? That was the start of the year. That's these storms that happened. So they're a bit upset about this and thought we better review this again. But I tell you what, I will endorse them right now, and they are an excellent buy-to-let landlord policy, and it's Total Landlord Insurance by Hamilton Fraser. I've done Ambo as well, who weren't great when it came to a claim. They just washed their hands of a claim that I had and just basically drew a line under it and took a view, even though there was more money they were having to pay out for loss of rent, because I couldn't get this resolved with an upstairs neighbour about fixing the roof. And they went, no, we've decided to walk away from this. It's like, that's unbelievable considering. Now, everybody can say you can argue, and this is where you value your time. This is why I'll talk about at the end. You can fight with the insurer to get the policy to pay out on technical terms and legal terms. But let me talk about that towards the end of this podcast. And I'll show you how valuable your time is really. You think your time's not worth that much, and I'll show you it's worth an absolute fortune, your time. Most important commodity you've got. You'll never get it back, by the way. Once you've spent it, you've spent it. You don't get time back. It's gone. That second has just disappeared. Snap our fingers. That second's just gone as well. That's how important it is. So, yes, you can do insurance audits and all the rest of it, but my personal view, out of all the insurers I've used over the years, out of all the ones that have tried to give me quotes and have been way over the box, it's definitely got to be Hamilton Fraser Total Landlord Insurance. The reason for that is because you know yourself, we changed to that policy. Within 2 weeks, we had a break-in, destroyed the flat, paid out 23,000.
I damaged everything there. It was about 20,000,
I was gobsmacked. And it's like, I've only had the policy 2 weeks. And they went, yeah, no bother. Easy to deal with as well, wasn't it?
Yeah, I met that loss adjuster, and it was quite a smooth process, to be fair.
We do get another claim paid out in as well.
I think there was another one. It wasn't as big as that, but we did have another one.
Yeah. And that's what, for me, is the most important thing. Someone else that can take the hassle off us and actually get this all resolved without us having to deal with it. Again, the value of time.
They not only covered the refurbishment of that property, they also covered the loss of rent.
Yeah, and that's the thing. It's like, and there was no quibble about it at all. Actually, you found out something that was a wee bit different, and you went, wait a minute, and challenged them. And they went, oh, you're absolutely right. We'll sort that. And I was like, really? This is great. So I think that's probably the most important point about this.
Yeah, and I think like mortgages at the moment, obviously interest rates are coming down. Premiums on insurance and things have started to come down recently as well. So now's a good time, if you're thinking about your insurance policy, to kind of review it and look at see what other deals and products are on the market.
I tell you what as well, you better review and make sure your buildings cover's correct. Because if you've not got your buildings cover at the right level, and you're underinsured and you have a claim, they will only pay you out on the proportion that you're insured for. So if your buildings cover, here's a classic example. Say your buildings cover is 100,000. You've only covered yourself for £80,000 worth, and they find out it was really 100,000. If your property burns down, they'll pay you 80 grand. That's all you're covered for. However, if you're only insured for 80 grand and you're insured for 80% of what the 100,000 is, they will pay you 64,000.
Right.
They won't pay you the 80 because you're only insured for 80% of what the true value is. So they'll pay you 80% of the 80,000. They'll pay you 64 grand. You've lost effectively £36,000 because you've been underinsured. And if you were at 100,000 insurance and that was the right level, you'd be paid out 100,000. You know the difference it costs to get the extra insurance? per extra £1,000 or something like that. It's like £1.50.
With an extra couple of pounds, yeah.
Yeah, it is minimal. So you're talking about 15 quid per 10 grand. So for 20 grand you missed out on, you for your 30 quid extra you should have paid on the policy, you've lost £36,000. I am a disaster recovery person. If the house burns down, if it gets completely destroyed or anything like that, it is covered. I'm £1,000 excess. Because I could take that hit. For some people, 250 quid excess, and they struggle with that hit. But me is just disaster. Anything else I can fix easily, and I get a good rate because of that. But everybody gets a really good rate from Total Landlord Insurance. I've mentioned it again. If you're not considering that, if you've not even gone to them, you need to go to them. I am not on any. Well, I am if I refer you, but I give it to charity because I just get a cut of their cut. That's it, really. But if you go direct to them, it's going to be the same price.
Yeah.
I just get a cut of their cut anyway, so they get a cut from the insurer. So I'm only getting a cut of what they're getting. There's no additional add-ons or anything like that. So I am endorsing them because I believe that they've got a great service and are really comparable and affordable online. But you can compare them against other people. You can get that comparison. You compare it against Money Supermarket, Money Saving Expert, any of these places that actually do that. If you find a cheaper deal, go back to the existing provider possibly and see if they'll match it or beat it. It's astonishing how a threat. I mean, I used to do that every single year with the RAC and the AA. Just with car cover, to break down cover. It's like it would be double the next year, and you just go, well, RAC's actually quoted me half, and they go, oh, okay, well, where did you get that now? It's like, and they type it in and go, yeah, we'll match that, just like that, halved. You know, the one that I don't like, it's almost, and I get the impression from everybody that's done it in the past, it's double the price of every other insurer, Direct Line.
And it's one of the most popular ones because people, it's like, and because they've got that big ad campaign that ran on the TV for a long time, and it's like everybody thinks of Direct Line when they think of landlord's insurance. The general public, that's what they think of.
Yeah, and for me in the past, all it's shown, I've never gone with them for this reason, because all it's shown with everybody else, it's like they're double the price. Because when somebody comes out, oh, my insurance is 350 quid for my house, like what you got? I just got a 2-bedroom flat about 100 grand. It's like, you're kidding. It's like, it should be half that price for the same cover, if not better. 3 times your rent cover. Maybe a bit of, and the great thing I love about Total Landlord Insurance with the buildings cover, it actually covers all the fixtures as well. So it's not an accidental thing or anything like that. It covers fixtures, but it also covers if somebody has to trample over all your garden and do that, and it covers loss of rent as well. So I think that's really important for me. And you can go direct to Total Landlord Insurance online. Okay. So we type it in, watch out for Simply Business and all the rest of it, because they all come up as sponsored, because they're obviously targeting that brand. So it is actually www.totallandinsurance.co.uk. I'll see if I can find it right now, actually. Let's make this.
It's interesting you said there, obviously, I mean, most people might know this, that, if you're going to get it cheaper somewhere else, go back to your existing provider and they'll match it. But then you can't really put a price on somebody giving you their actual experience, like we we're just saying just now, with a company. Because how many times have you actually used your insurance company? And if it comes to the crunch, are they going to actually follow through? Whether they're matching the price or not? You've got that added reassurance that somebody actually used it.
Total Landlord Insurance, and now introducing pet damage protection for your properties, because obviously that's a mandatory thing now. Highly recommended. They're also a proud partner of the NRLA. But yeah, definitely. And you've got a quote system online anyway, so you can do all that. You can do policy comparisons and stuff, and what they do, Essential and Premier. And one of the things I would do is definitely get legal cover. It doesn't cost much for legal cover. Legal cover generally isn't included in a policy now. But what they're doing with legal cover is you just buy a separate policy for legal. It's like, for me, it's like 150 quid a year for a legal cover for the whole lot. It's not an add-on. Because I was thinking, they said one time 150. I went, is that every property? They went, no, that's just the whole policy. That's to cover the whole policy. It's like, all right. I thought my premiums were doubling overnight. But he said, no, that's just for that. So I think that was the great thing about that. And that was one of the problems I did in the first place. I actually forgot to get that. Hence the reason why we had all the hassle back and forward about that one, about the roof and not getting it fixed. And I didn't have anybody to protect me or help me or legally. And, I've got to admit, that's why I left my previous insurer, because they failed to do that, and they
And
changed that
kind of abdicated
without.
it and walked away.
I mean, it
from
says they informed me, but they sent me an email and says that's no longer included, and it's like flipping it. Am I meant to read all that small print to find out that's not included anymore? So they did a fly one and then bypassed it, and I could have argued it, but again, I'll talk about that at the end about how that's important, and it's kind of wasting your time trying to fight with somebody like that, and I'll explain to you why. So we've covered the insurance audit, and doing that, you could save hundreds, if not thousands, of pounds a man since every single year. I'm talking about, for me personally, about £5,000 and £6,000 or £7,000 I'm saving a year doing this.
Yeah.
So think about that. If I'd never had a claim for all that time, I've saved about 30 grand over 5 years. A lot of money, eh?
Yeah.
Why do you think £1,000 excess is nothing in comparison when you look at that? I almost get to the point where I think I should just be self-insured, but the banks insist you've got to have it.
You have to have it, yeah.
As a part. Yeah, Woolworths used to do that. They had all the real estate, and Woolworths used to actually self-insure. It's like, we didn't need a policy because it cost an absolute arm and a leg for a policy. So they went, yeah, we'll just do self-insurance. And that's not what brought them down. It was obviously a lack of trade, but it was effective and cost-effective for them to do that.
Time,
yeah. This is where we get on a cost-effective. That's a good intro into minimising maintenance costs.
Yeah.
What do we do about that then, Richard?
Yeah, I mean, obviously, one of the most effective ways to minimise your maintenance costs and things is to identify. I mean, we cover this all the time. Identify a problem early on and fix it before it becomes a bigger and more costly expense to fix or repair. And if you've got buy-to-let, that is so important to nip that in the bud early. Now, whether that's with you doing regular inspections, if you're self-managed, or your agent doing regular inspections, and also having your tenant in that position where they feel comfortable to pick up the phone and be like, look, I think there's something wrong here, and point out to you in between these periods as well, so you could pick up on things.
Now, here's a wee trick. Here's a wee trick that's happening right now. Because of increased costs, a lot of agents are actually not able to do inspections included anymore. So ask your agent if they will do inspections. It might be a wee additional cost to do that, but it's important to do that. It just costs an arm and a leg for them to run their agencies now.
Such a big overhead.
That personal experience.
That's where time comes in as well.
Just double check. Yeah, just double check with them. They're doing that as part of the deal, or if it's included in the contract and additional cost. It's entirely up to yourself, but just double check. There's nothing better than prevention is better than cure.
Yeah, absolutely. And things like your inspections are important because they pick up on things. Do you know, your boilers, your heating systems, if you've got appliances included in there in the property, I mean, are they all checked regularly and that they're functioning properly? And
I've got a maintenance contract with British Gas. Have a hell. It's like that costs an absolute fortune, and they do not have the call out that what a local contractor that you've got a good relationship with have. They'll not. British Gas will not come out, or Scottish Gas will not come out on Saturdays and Sundays. They won't come out in the middle of the night. They'll just a wee bit of management on phone, maybe phone people up and go, everything all right? Yeah, this is what you can do. And it's like, we'll see you tomorrow then. It's like, what? It's like, if it's urgent, then they just, unless it's an emergency and it's a gas leak or something like that, they'll not come out. And that's the thing. So personally, for me, spending all that money on policies to do that, it's a good 15-20 grand a year. No worth it.
No. And I've come across properties with policies in place, and when it comes to the crunch and something needs done, do you know, like you say, they're all right, we'll be there in 2 to 3 days, whereas our contractor would be there in 2 to 3 hours.
Yeah, and that's, I think, the most important thing. So that's the most thing I'll do. The other one as well is don't skimp. If you're going to supply white goods, don't go for the cheapest rubbish.
No.
Just try and get something that's cost effective. Now, washing machines are 10 a penny now. But I tell you what, they're really good. Even the low entry, the cheap entry one is actually really good quality. Most washing ones are made by Bosch or Hotpoint or something like that under some fictitious brand. Indesit, for example, is Whirlpool. Who would have thought? Owned by Whirlpool, who is owned by Hotpoint, who is owned by someone, It's very incestuous, the whole thing. They're just different brands, just like Volkswagen and all the rest of it have different cars, and they all have different types of washing machines and cookers and all the rest of it. So they've got all different brands under the one thing. So yeah, it's you get what you pay for at the end of the day. I tend to go for fitted kitchens with integrated oven hob extractors as minimum, and then leave a space for under counter washing machine and underwater. Under counter washing machine.
You were thinking of plumbing.
That's me thinking of diving again. And a freestanding fridge freezer. That's probably best as well, because a lot of people just bring that with them. You want to encourage people to bring their own stuff. Plus the fact you don't get really good tax advantages for doing furnished properties anymore. See, we're getting into tax a wee bit. So some planning, I would say, Richard. What do you think about preventing the maintenance? Is that the right thing to do?
Yeah, definitely. And it's like what you say. I think a lot of people bring their own stuff, and as you say, your model is to provide the cooker and things, which is obviously cooking facilities. But I think a good thing is for prevention is also making sure that your tenants know what to do with, whether it's the boiler or whether it's an appliance, or they have either instruction manuals to do that, or they've been shown how to do that. Topping up the pressure on the boiler and making sure that it's running properly. And these are things that a tenant's expected, and it's their responsibility as a tenant. But you need to make it clear to them that that's their responsibility. Or they'll just think, oh, they'll just pick up the phone to you, or they won't think that they're responsible for making sure things are running properly, and they then are notified that it's them that's not doing it correctly, and it's user error, and they're like, well, you never told me that. So I think clear and concise, like laying out the responsibilities at the beginning of a tenancy by a tenant about what they're expected to do as a responsibility is so important.
That's why it's so important to give them checklists and give them the moving pack and who to contact and all the rest of it. I think for me personally as well, it's actually send them a text from your property management division or a WhatsApp to say this is the contact numbers that you need to get in touch with us now. The tenancy is actually run by us, and you don't need to contact the office. You can contact property management now.
We also get them as part of in moving, but they also get the property management cards, which has got all the contact details, and they could put that their wallet in their purse, their handbag, whatever.
I think it's important just to, personally for me is, it could stay in the fridge, but 9 times out of 10 they're usually out, or they just quickly go to their mobile, so it makes it really easy for them on a WhatsApp. Definitely WhatsApp seems to be more accessible to get in contact with somebody than actually the normal Vodafone line now, or whatever it is.
WhatsApp seems to be the way forward.
It seems to be quite easy to deal with, and it can send messages and videos quite easily as well, in high quality. I think that's most important
as well. I think, which is a lot clearer than doing a text message. Do you know what? And text messages and emails and things, a lot of things could get construed and picked up incorrectly. I think a voice note's very clear, concise, and you know exactly what they're saying and what you're relaying to them as well.
Definitely, yeah.
But I mean, it's simple really, and I think the planning is the preventative kind of the maintenance thing before it becomes from a simple maintenance problem to a really expensive repair. And like you say, prevention is key, and you could avoid really costly emergency repairs if you just kind of keep your tenant in mind and make sure that they're happy and they know what their job is to do. And between yourself, either the landlord or the agent, and the tenant are both on the same page about obviously what their responsibility is, and to protect the property and not get to that point where you've got really costly repairs because things have been left.
Yeah, definitely. I would say so. Yeah, makes sense.
And then it moves us on to then we're going to talk about boosting income and cutting tax and things as well. And this is where you wanted to talk about like the margins and things, Jim, and looking at the actual profit that you can make.
Floats my boat straight away. Definitely.
I know it does.
It floats my boat straight away. Let's get right down into these numbers, into the nitty gritty. I am going to share this spreadsheet. I love this because this is a ready reckoner for me every single time, and it will show you exactly what you should be doing, how you should be doing it, and all the rest of it. So let me just get onto the share, stop screen, share screen, and we'll go into there, and we'll go into Excel, and here we go. See that all right? Yep. Okay.
Yep.
Now, for most people, it might be illegible because it's quite a small screen, maybe on your mobile. So I'll zoom in a bit on this. I'll take a zoom so you can see that. So this is number of properties. Now give me a random, 80 grand, 2-bedroom flat, 75,000.
Yeah.
Okay. Now a lot of people go, where are you getting them? Well, that's in Fife. You've got an 8% ADS. Then you've got a 25% deposit to put down. Your initial mortgage rate, we had calculated, what was it, 5 or 4 or something? You can get a 4% rate. You've got a 3% arrangement loan, and then you've got interest, and then your rent on a 75 grander. It could be a 1 bed or a 2 bed. So what are we talking about? 550. Let's put 500. Let's put 500 and see how we get on. So we've got 500 in there. We've got that in there. We've got a 12-month occupancy rate. And here's the number: £6,000 in rent coming in, mortgage interest only, 2,370. You've got a gross profit of 3,682. Okay, that leaves you every month cash flow after mortgage is paid of over £300. This is your leverage. You know, you're sitting at 7.2 now, and you're going to 13.8 with using the bank's money because you're getting 4%. So you're leveraging yourself by 7% over the normal yield. Overheads, 30% of that, and then net profit per annum. Once your overheads are taken off, that includes your letting agent. But it could be a lot less. It could be 20%. But we'll work that out. You've got a 7% return on your deposit. The deposit is a combination of your legal fees, which is about £2,000, and then you've got your £6,000 for your stamp duty, and then you've got your 18,750 for that. So that's what that number's made up of, the 26,750. So all in, you've got 26,750 in. You've got a 7% net return on that, but you've got a property which every single year, apart from that profit, will double. Generally, it's about 4% every single year. House prices go up on average from 2003 to 2023, because this is when I did it. But still, it probably go even more than that now, actually, because since 2023 to now, it's gone up a bit more. But we'll take 4%. So over a 20-year period, your return, your profit is, if you did nothing and you didn't spend this and you stuck with these numbers all the time, your profit is just under 38,000 before tax. Remember, you've got to pay tax on it. Capital appreciation is 66,000. Okay, that's the 4% that's gone up every single time. So your total return on your equity, initial equity, over the 20 years is 390%. Now, I can tell you, if you look over 20 years of Bank of England, it tells you that inflation is a lot less than that over 20 years. Yeah, than 390. So you're beating inflation. That's the most important point out of that return that you're making. And you can play about with this. The great thing about this spreadsheet is when I look at this, I'll just zoom out. There you go. You can see most of it in here. When you start playing about with this, look at your tolerance and thresholds. You can change this to where does it break even? So right down here, this is the figure you're wanting to go to 0, the break-even point. So if I change it to 8 months, we're down at 482. See that?
Yeah.
So if you're 8 months, if you've lost 4 months in rent, you're still covering your overheads. Okay. If you go to 7 months, you're about break even. That is a good tolerance, by the way.
That is a good tolerance.
That's a 55% occupancy, a 58% occupancy. A lot of properties are a lot more than that. So if you were doing 100%, you're quids in. So there's a good tolerance in there. If you change your mortgage rate because suddenly you've taken a tracker, or interest rates go up, or you're out of your mortgage now and it goes up to the 8%, will it tolerate it? Just
no more.
Yeah, so you're borderline. So you can go up to 8% and you'll just cover it. But then you've got the option there in the overheads where it's 1,800 for the overheads to say, I tell you what, I've actually saved more than that, because the 15% are generally in total half of that. So you've got 900 quid there, which you might not even spend on anything, or you might decide to take it back and self-manage yourself. In the short term, because you're tight for margins now, because maybe the interest rate has gone up. So it gives you a huge amount of tolerance there. That's the most important thing I see in there. And if your rent decides to go down, so we'll change it all back and say rent, suddenly government comes along and says you're only getting 400 for this.
We're getting 400, yeah.
You're still well within it. You've still got a 4%. See that?
Which is quite good, yeah.
Yeah, so if you're 450, because you say you get a one bedroom person in, because there's a huge amount of properties on the market for rent. Market turns. There was a time like that where there was a huge amount of oversupply, and there was hardly any tenants looking. So we had to say, I tell you what, we'll put a 1 bedroom person in a 2 bedroom property. So they ended up getting 400. So that's why you have to do, or you maybe put a 450 because you've had to cut the rent because you're competing against somebody else. Listen, this can happen. In Aberdeen, when the oil ran out, or when they started changing the policy, 1 year Tony was paying £750 for a 1 bedroom flat. The following year she was paying 350.
God, that's a drop.
Yeah, The market tanked completely.
Yeah.
So don't say it can't happen, because it did happen in Aberdeen.
I
Extenuating
think,
circumstances, but this is the tolerance you've got to work out. So how low can the rent go? There's like a song there. How low can the rent go? 350. We're still all right. 300, you're break even. So break even 300. Yeah. And it'll never
yeah,
go as low as that, because you've got a 2-bedroom or 1-bedroom property. So, and your local housing allowance is 448 quid anyway for a 1-bedroom,
yeah,
and it's like
mhm,
528 or something for a 2-bedroom. So
yeah.
if you've got somebody on benefits in there, your quid's in. You'll get that from the agency.
And
So
it's
these are the
highly
sort of
unlikely
things
that
you've
the
got to think about.
LHA rates are going to go the other way.
Yeah. So for me, these are the things you've got to think about. And when you look at that, and it's also about cutting tax as well. Limited companies are really good, because it
Mhm,
allows you to pay yourself in dividends.
yeah.
Dividends on a low rate taxpayer is 8.75. No national insurance.
Mhm,
See that? 8.75. Take out dividends. Take out the basic rate of allowance if you're no working. You know, if you take out the 12,500 tax free, and the up to 37,000 can be taken in dividends at 8.75 after that.
mhm.
So you're paying a marginal rate roundabout on 37 plus 12 is about 50 grand, and your tax is round about four grand. So you're paying a marginal rate of tax of about 8%.
Yeah.
Yeah. Now remember, that's 8% personally, but you're still paying 25% corporation tax, I think it is, or it could be 20 if it's under the threshold. And there's rules. Look it up, but you know what that is. So you're still paying a decent amount of tax. It's just that you've got more in your hand cash wise. That's the most important thing. And that's a tax efficient way of getting more in your hand. So you're getting 50, but you're getting left out of the 50 with round about £46,000 in cash. Now, you're still paying a decent amount of tax, but you're paying a lot less than PAYE, which is national insurance, which is pension,
Pensions, yeah.
which is, yeah, and which is PAYE. And you're getting nailed for about a marginal rate of 33% or more.
Mhm,
So that's what you have to work out, which is the best way to do it. So these are all the different things you've got to be aware of when you're boosting your income. Boosting your income as well. Rent increases every single year.
just got to say, yeah,
Cha-ching.
you
Thank
need
you,
to be
Patrick Harvey
reviewing
of the
your rent.
Greens,
Yeah.
for putting rent controls and suggesting rent controls should go in place, because I never increase my rents every year, but you're allowing me to do that because you're wanting rent controls in to tell every landlord that they need to put their rents up every year. I know every
And
landlord doesn't need to. So if you're going to get your pitchforks and torches, you know, all the rent people, it's like, I'm only just saying that to be
mhm,
sarcastic, because that's what Patrick Harvey did to the rental market and made it worse for tenants.
yeah, but
Sorry, he's
ironically,
the Minister for
I
Tenants.
was going to say, ironically, the Minister for Tenants and made it,
That's
yeah.
mental, eh? So that's what it's going to cause. I'm still lobbying the housing minister, who's Mary now, instead of Paul, the new housing minister. I'm still lobbying her to say that I need to speak to you, because I need to
Mhm,
talk to you about the decisions that you're making and how that's going to affect tenants. You just
yeah.
don't realise what's coming, what's going on, what's happening, and how it's affecting tenants.
Mhm,
They think it's landlords that are causing this. It's not. It's the legislation that's causing it,
mhm. Yeah, I totally
and
agree.
ideas on how to minimise that for them as well. Upgrades as well. You do any upgrades or any things, you can boost your income that way.
Yeah.
I've agreed with my tenants sometimes about upgrades and said to them, look, I'll happily put it in, but your rent will have to go up a wee bit to accommodate for that. Maybe about £3,000 to put additional double glazing in. I mean, there's double glazing in already, but it's maybe a bit out of date. It's not really out of date, it's still efficient, but they just want something new, or they want a new bathroom, or they want a new bathroom suite, or they want a new kitchen or something like that. And it's like, well, there's nothing wrong with what you've got, to be honest. And that's what you paid for at the time, and that's what your
Yeah.
rent's based on. So if you want that upgrade, like anything else, it's going to cost me money. So in order for me to get the right return, it's going to cost me £5 to put the kitchen in, or £6. Then I'm maybe 50 quid a month. So 50 quid a month times the 12 months, £600. Yeah, £600
Mhm,
going to cost me £6,000. So a nice 10% return on my kitchen upgrade.
yeah.
Yeah, see how that works.
Mhm,
So these are the things that you've got to work out, and you've got to make sure that you're looking after. Now, what's your thoughts on Richard? What have you got to say on this? And before we move on to valuing your time.
Yeah, and obviously doing upgrades and things is a brilliant way to obviously then implement a higher rent, or even if you're in between tenancies and things, to stay at a higher rent and attract people. We done a show, it was called Luxury Lettings, and it did kind of take it to the next level. But you could click through on the blog that's attached into that show and that blog as well. And there's actually a lot of good tips on that one. So definitely click through on the blog that's attached to the post and click through on Luxury Lettings. And as I say, it does take it to a quite a high level standard, but there's still a lot of good tips and advice in that.
There's also one on tax for landlords on here. If you click on the link,
yeah,
tax for landlords on the blog, which speak to an accountant, but I am an accountant, or previously was an accountant. But speak to your accountant because you've got your own personal circumstances. The true profit has 3 pillars here.
Mm-hmm.
Now let me talk about this. This is the most important thing: the income, expenses, and the investment.
Okay.
Now, by giving them all your focus, you can inject your rental property with the best possible shot at a prolonged and limitless growth. Why do you think I've been in this for 30 years and I wouldn't really dream of leaving? I've had a couple of wobbles now and again. I thought, yeah, and I was like, whoa, wait a minute, what are you doing chopping down the tree that bears the fruit? Are you an idiot or something?
Stick to your blueprint, yeah.
I gave myself a biff in the chops and says, get yourself together, Parker, you idiot. It's like, what are you thinking? That's the sort of thing you've got to be worried about. Now, valuing your time. Let me tell you a story. I cleaned my house to save money. I cooked food at home to save money. I price matched different grocery stores to save money. I never paid anyone to do anything for me, even though I was in a position I could afford it. What I didn't realise was everything I did to save money took so much time and energy out of my life. Cleaning, for example, this is just a story, but you could do it on your own. Everybody goes through this, by the way. Mm-hmm. Cleaning my house, this is the difference between somebody that's just no bad and well off, by somebody that's a multimillionaire or a millionaire. And then you've got a billionaire, which is a totally different ethos. They use systems and people. But you could still be millionaire, multimillionaire. I cleaned my house. The cleaning my house took 4 hours to do every week. The preparing the meals took 4 hours to do every week. The price matching going to different grocery stores took 4 hours each week. That is 12 hours. That's 1.5 days a week, by the way, working. Mm-hmm. One of my managers, after seeing all this effort I was going through to save a few pounds, told me, you spend 12 hours a week doing things to save money. If you took these 12 hours and closed 3 more deals or found 3 more properties every week, you'd be able to pay people to do the rest of the work that's taking you the 12 hours. Think about that.
Yeah.
This is why I say no using a letting agent and trying to save money is a false economy when you think about it. For a lot of people, they don't get it. They don't get it at all. They don't understand. People that are wealthy, that have got good, high-paying jobs, yeah, you have a job and you have your side hustle as your property. That's what builds your lifestyle. Your job it looks after your living day to day, but your hustle, your property business, or your property empire, as you would call it, because it will be, start as you mean to go on, one day will be your lifestyle if you keep reinvesting it. That's why you have your job. You live on your job. You reinvest.
And don't take out
every single time. Think about this. When you listen to that advice and put all your attention to make more money instead of saving the pennies, you're able to buy back your time. Hey, I'm a time lord. Just call me Doctor Who, Time Lord Jim, because I've got all the time in the world to do whatever I want now. If I want to do something, I can just go and do it. I've got time to do it because the money keeps coming in irrespective, because it truly is what I've created as a passive income system.
Which is actually quite a difficult thing to do, and everybody thinks it's quite easy, and they use that term quite a lot in training, things like passive income. But to actually get to that point is a different story.
Yeah, completely different. That's where you get to, what does that person know that I don't know? We talked about this earlier on.
We
It's
did
like,
that.
what do they know that I don't know? How are they at that level? They
How
must
are
be
they
doing
there and I'm
something
here? How are
that
how are
I'm
they
not
doing
even
that?
aware of. That's what you think about. What is it you're doing that I'm not doing?
Mm-hmm.
What is it I need to do that you're doing that I'm not doing? That's the sort of things. This is why it's important to get around people that are highly successful, not the furus, by the way, not the ones that just want to sell you a course. It's like, yeah, you can sell you a course, but are you eating your own cooking?
Mm-hmm.
That's what it is.
Yeah.
Are you eating your own cooking? Are you doing what you should be doing? That's the most important thing you've got to think about. So valuing your time. You want to finish off, Richard?
Yeah. No, I think when you come to speak about time, Jim, it is so important, and especially when it comes to managing a property portfolio. I think, do you know, if you're self-managed or that kind of DIY landlord and things, you really need to consider whether have you got time to be sourcing contractors, managing repairs, do you know, keeping up with all the legislation as it changes. Do you know, there's a lot to keep up with. And then if you don't, do you know, there's a lot of fines and things that could come with that, and there's a lot there is recourse, and they're starting to police it a lot more. Do you know, I know years ago it wasn't really.
It's going to get worse before it gets better.
Yeah, definitely.
Well, I actually don't think it's going to get better. It's just going to get worse.
Yeah.
For a lot of landlords.
For me as an agent, and I think it's a brilliant thing to professionalise the industry and make people be qualified and accountable. And then I think if you are using an agent and you really are unhappy, I mean, you need to look at why that is and whether it might be time to move to a different agency. Or, do you know, are things being badly managed? If you jump back in the blog that's attached to this again, we've done shows and blogs on this previously. We've got one which is called Badly Managed, and then one about actually how to choose a letting agent and the things to look out for and the questions to ask when you're choosing a letting agent. Do you know how they do things and what they would do in certain situations? Ask that before you actually appoint them.
Let me finish off with this,
and
you can find a word after this. Let me finish with this. How many people lie on their deathbed and say, I wish I had more money? How many people lie on their deathbed and say, I wish I had more time?
I wish I had more time and I had more time
to do it.
Yeah, I had more time to do
Time Lord.
Yeah.
Time Lord. That's what this is all about. Nothing to do with money. Everything to do with buying back your time.
And do you know, and there's a note here, obviously, like the time is the one commodity that you can't simply manufacture. Well, I think you can, obviously, but you could also
duplicate your efforts. Well,
I was just going to say
that's why a letting agent. That's how you do it. You pay a letting agent, which is effectively less than what you're going to be doing with the hassle. This is the 4 hours, trying to save money. It's the people that sell stuff on eBay. It's like, oh, I've made 50 pence. It's like, how long did it take you to get that? It's like, it took me about 5 hours with my work. Okay, but it's taking you 5 hours, and you're the one that's on minimum wage. No wonder you're on minimum wage, because you don't get it. You don't understand. It's like you're working for pennies, and you're not understanding the leverage you can have based on what you're doing. If you concentrated more on your job and being better at your job, you'll get promoted, and therefore you'll be on a higher salary. I'll allow you to invest more money into your buy-to-let property. That's exactly what I did. Started as a trainee accountant, lived on that level for years and years and years, even up to a financial director. I was still living at that level, £1,000 a month, 12 grand a year we lived on. That's it. Everything else went into property. Do you think I regret that? Absolutely not. No. And it can still be done today.
Yeah. No, I definitely agree. Definitely. I think the good thing about what we've just done here, Jim, is if everybody's watching, obviously this goes onto the YouTube channel and reruns. You could go back.
You better be watching. It's like, if you're not watching this or you're not listening to this, you're not serious.
But people, you could go back, look at that spreadsheet and how you worked that out and how you done that risk analysis. Click through on all those other shows and blogs that we've done on, you know, tax for landlords, choosing letting agents, you know, even the luxury lettings and things. There's so much advice and tips in there to help you make the most out of your buy-to-let journey, and improve your profits. And it does all come back to having a happy tenant and a really well looked after property.
Brilliant. Good. Okay, let's wrap it up there.
Okay, we'll leave it there. And thanks for that, Jim. Obviously, a lot of good insights there into buy-to-let. Of course, you've been doing it 30 years. So hopefully everybody got something from that. And I'll see you later.
Bye for now.